Hey everybody, Tom Gentile. Welcome to this is our first video podcast session we got going on, so you can see both of our ugly mugs here. Hey Chris, how you doing?
The voice of, or the face for radio, right? Or the face for
That's
podcast.
right.
I'm doing great, Tom. How are you?
You know, someone told me long ago, I actually did a radio show out of LA long ago called the Profit Strategies radio show. And so, we kind of coined that term, Profit Strategies Podcast. And so we're excited to kind of expand it. But I had a guy come to me from the Howard Stern building in LA. And he goes, you know what? You got a great radio voice. I guess he was telling me I'm ugly.
Did your mother ever tell you that, though, Tom?
No.
No, that's what's important. That's what's important. If your mother tells you something like that, then there's a problem.
So I've got multiple screens I'm looking at, looking left, looking right, looking center. I feel like I'm watching The Guardian before they dive in the pool.
A tennis match. Right.
Anyway, good to see you. And, we got a kind of a packed little podcast here. As we enter into, is it the third Friday? Is it the third Friday of the month again?
It's that magic Friday of the month. Yes, sir.
Options expiration. It's options expiration every week for a lot of us, but the third Friday represents the options that are the most liquid for the entire month expiring. And so as we enter into the month, we'll talk a little bit about the market overall, maybe talk a little bit about what you're getting into, what you're getting out of, Chris. I'll talk a little bit about what I'm looking at, what I'm getting into, what I'm getting out of. And then maybe what to look at for the week to come. So what do you see, Chris? First of all, what do you think about this market this week?
You know what? Let's bring up you and I talked about it last week a little bit. I think the 800-pound gorilla in the corner is finally coming out, and that's inflation. Bond yields continue to be a concern here. Everybody's starting to look at that now. And I think that's why you've got a little hitch in this market, or a little bit of a soft spot that we've seen over the last couple of days. People are taking some profits. But you know what? In the grand scope of things, Tom, the S&P 500 hasn't had a pullback greater than 3% since the last quarter. I mean, this market has been on fire. We were kind of due when you look at the volatility index and you look at some of the sentiment indexes in the market. People are maybe out there ahead of their skis a little bit. I think this is just still within the confines of a healthy correction. How about you?
Yeah, I mean, like you said, the biggest move that we've seen to the downside, for instance, the S&P 500, you got to go back to really the end of January when we went from 385 on SPY down to below 370 before climbing up to the highs that we've seen just earlier this week.
Right.
And that was the biggest move I've seen, because other than that, you really got to go back to October of last year if you want to see the drop. So, yeah, this isn't something, I mean, right now it's just a blip on the radar. Will it become something more? And that's the question that we have to ask ourselves. Now, I'll give you my take, Chris. This is a period of time where we're out of earnings for the better part of at least a month. So we'll start hearing about earnings again sometime sometimes we get into March, into the end of March. But what I'm looking at here is, what are the seasonal patterns telling us for the stock market? And the seasonal patterns going back the last 10 years tell us that we are likely to have a pullback for the rest of the month of February. That's everything I've seen is telling me. All right. So I have this little software program called the Money Calendar, and I'm actually able to look at it. And, if I were to look at it on my phone, I take a look at it on my phone, and my phone just kind of tells me what's going on, today. And as we're in the end of the week today, it's still bullish. But going into next week, we start to see the colors change. We start to see more bearish opportunities than bullish heading into the end of next week and even into the beginning of March, is what I'm seeing. So could we continue on a pullback? If history's taught us anything, then history's saying, yes, we could.
Yeah. You know what? If I'm looking at one indicator, and I like to look at one or two to kind of encapsulate, the canary in the coal mine right now, I think, is the VIX. If you look at the volatility index, that thing has bounced between 20 and 22 for the last almost month since we saw that spike in the beginning of February. It has been jammed in between that 2 point range, 10%. For the VIX to be doing that and not be decisive, I think is that makes it the one thing you have to watch. And obviously that gives you an indication of what people are paying for their premiums right now. Are they paying up or are they not paying up? The VIX sitting at its 20 and its 50 day right now hasn't had a run above its 50 days since we saw that spike. I think that's what you watch to answer your question. Are we going to see a continuation? And right now, it's kind of like that spring that's been pushed down, or that beach ball that's under the water, Tom. I think VIX is showing that it's ready to pop, and that would go along with exactly what you're saying. Next couple weeks could be a little bit of rough riding.
There's one more indicator I'm looking at too, and you started talking about inflation at the beginning of the podcast. Take a look at the price of bonds, more importantly, TLT. That's a good one anybody can look at. You can take a look at it. I mean, if you go back toward the end of the year, we were hovering above the mid 150s. Then we dropped. We dropped into January and came back, and support became resistance. Since the end of January, this week we dropped into the mid 140s. So what used to be, let's just sell some bonds so we can create some cash to buy stocks. Now it's starting to look like maybe inflation really is starting to rear its ugly head. And that could cause problems for stock prices as well.
Well, what is up? Let's see. I'm going to get a quick shot. 41% year to date that doesn't move this much. The 10-year yield, which goes along with the TLT. This thing has shot up. I mean, it looks not like a .com stock, but if you put a plot of the 10-year up, the TNX or the $TNX, if you put that up, it looks like a stock chart. That goes hand in hand with the TLT dropping the way it has. And again, we're going to say it over and over. Inflation being a little bit of concern.
Right. Okay. So let's get into a couple of sectors or areas, and let's start with energy. So dirty energy we talked about last week, and dirty energy is continuing to move higher. I think a lot of it has to do with the weather that has made its way across the U.S. I mean, we're just getting, it's called the winter invasion. After one after another, they're naming these storms. They're coming in like children in what used to be a classroom. They're just coming in and going. And so, again, we've got more snow hitting now the Northeast as this week comes to a close. So it looks like we're going to have another white winter weekend up in the Northeast, as well as a lot of the eastern part of the United States. But USO and oil have not retreated from these highs. They've actually made new highs. I think a lot of that has to do with the uncertainty of fuel, of natural gas. And I think it's also spilling over into the oil markets right now. But tell me what's going on with clean energy.
Clean energy is getting hammered, Tom. Clean energy's run into its time. It's, call it the broken clock or what. It has to happen at some point. When you see companies like Plug Power, hydrogen play, that goes up 100% in the beginning of January. A lot of these stocks went through the roof. It's hard to call it a crowded trade. I stay away from crowded trades. This is a sector that's still in the acceptance phase. Obviously, right now, talk about that stimulus package, $1.9 trillion, and how much of that's going to help to go to clean energy. That is a little bit that's in question, but a lot of people just taking profits. I just looked. If you pull up the TAN, which is the Invesco Solar ETF, that has recycled itself in 15% ranges 3 times now since January.
Yeah.
3 times we've seen a 15% pullback. This time's a little different because the TAN is sitting on its 50-day moving average. That is that one thing where we say if that is moving higher, the trend is your friend. There's a 2-to-1 chance it's going to close higher the next day. It's made this move in 5 days, 15% lower. So
right, but don't you think, I mean, I'm looking at it, it's triple bottomed this year. It's now hitting also resistance back in December. Is it, for lack of a better phrase, is it time to get a tan?
It is time to get a tan, Tom.
It's time to get a tan. Yeah.
Very well put. Very well put. This is right now, and I'm writing something up for straight up profits that'll be up there later today, along with my weekend watch list. This is one of those areas where you can pick up some deals in the market. And you tell me, do you think that the solar trade is going to be higher or lower 3 months from now and 6 months from now?
I think the longer you go out, the more likely your chances are that we're going to see that actually running higher.
Yep. So it's hard to get on the bearish side of this trade right now. If you look at it, I think it's a good pullback. But your clean energy, if you look at clean energy and dirty energy, you know what? Clean energy right now is taking a break. But I think you're right. It's time to get out there and pick up a tan.
I mean, it could be something as simple as just rotation out of one energy sector into another, because the oil fossil fuels have just gotten just beat up so bad. But
How about
the other area I wanted to talk about for a few minutes was precious metals. And so, when you look at like GLD, here's another one that is deep diving back down to the November lows, back in the mid 160s. If you're taking a look at GLD, now this thing just a month ago, or 2 months ago, was trading in the high 180s. So we've had a good at least 10 to 12% pullback in gold. And then, take a look at silver, SLV, which, you got a lot of folks out there that believe that silver is going to be the new gold. It's going to be the one that really runs high. I mean, it did have that short squeeze moment where it popped. It had this big pop and drop up there around 28, and then dropped right back down into the mid 20s. But it's been sitting there since. So when you look at the pop and drop for silver, we've gone from 28 to around 25. Okay, so guess what? When you look at that 28 to 25, that is, guess what? That's a 10 to 12% pullback. So a lot of people look at silver and they go, oh, yeah, silver's doing fine. Look, silver is fine if you eliminate that one day. You eliminate that one pop and drop day, then we're very close to sitting at the highs of 25 half highs on SLV. It looks bullish to me. What do you think?
I agree. If you look at it from just a technical perspective, the 20 and the 50-day moving averages are trending higher on silver. Not the case with gold, man. When you pull up the GLD, pull that up and you look at the 50, 20, and the 200-day moving averages, and this has got what I call a trinity play here. Your 20 just crossed below the 50 and the 200. The 50 is crossing below the 200. You know what that is? That's the old death cross. Gold, from a technical perspective, looks like it's in a little more trouble than silver. And I wonder if the answer to that is in the idea that silver has a little more industrial use than gold.
Right.
Because it's certainly not because inflation's off the table. Because gold should be going up with inflation, correct? If I go back to those old trading books, gold should be going up.
Yeah, but I mean, you're starting to see more and more old school folks coming out and saying that gold is being set to the back burner in favor of a new inflationary, let's call it digital currency or asset, digital asset. And so that moves me into digital assets and Bitcoin. So here we go again, Chris. Same story, different day. Bitcoin is now we're in the, we ran from the 50s into we're in the low 50s now. I mean, we could wake up Monday morning, this thing could be above 55,000. Where do we go from here? I can already tell everyone who's on the podcast, any of you that have been around me for any length of time know that my target for 2021, we've already exceeded it. It was 50K. We hit 50K more than a week ago. And so now I've got to reset my targets. My next target is, I've moved my target up to 67,000 and that's a conservative target I have on Bitcoin. But I also can't help but wonder if the tail is wagging the dog when you look at stocks like Riot Blockchain.
Mm-hmm.
So Riot Blockchain is a stock that has, what's it got? A $50 million market cap, where Bitcoin is very close to, by the way, Bitcoin going above 53, if it gets above 53,300 or so, we're at a $1 trillion market cap just for Bitcoin. So we're very close to the $1 trillion cap. But Riot's at only 50 million. It's not much at all. And so, but we're seeing that the folks that were talking about GME, GameStop, and the ones that were getting into AMC, I have a feeling that they're now running that crowded trade into Riot, as Riot 2 weeks ago was a $20 stock and ran up above 80 in the aftermarket hours earlier this week. I mean, it smells like the same thing. I don't want to take a song from Nirvana, "Smells Like Teen Spirit," and call it "Smells Like," the short squeezers are going to get squeezed again. But that's what it feels like. We had big days this week in GameStop or in Riot that really look a lot like what happened. So the only concern I have with Bitcoin right now is that Riot is actually pulling it up, and Riot could pull it down. But the other side of me says $1 trillion asset, multi-million-dollar asset. $1 trillion asset doesn't get moved by a multi-million-dollar asset. It's usually the reverse. So the one good thing that I like about Riot is it's actually based on Bitcoin. That thing is moving a lot with Bitcoin. It's just moving a lot more. I saw it up 30% earlier this week. I saw it also down 15%, where Bitcoin was up 10% at the time Riot was up 30, and Bitcoin was down 2% at the time that Riot was down 15%. So I'm seeing these just amplified moves in the stock, and we already know what that is. That's the crowded trade happening with Riot.
Yep. So let me go on that for just a little bit, expand it out a little bit. We talk about Riot blockchain. What, for the people who aren't opening up futures accounts and not trading Bitcoin and other cryptocurrencies through a future account, what are your top 3 ways that you trade it for the person who is a buy and hold in terms of stocks or ETFs?
Well, number one, and this is maybe not my top way, but it's a way that a lot of people are doing it, is they're going to brokerage firms that have I call them faux crypto or fake crypto. And so if you look at Robinhood, you can buy their version of Bitcoin, Ethereum, and the likes. But the spreads are going to be wider. I actually had somebody ask me on one of my live streams earlier in the week, how come Robinhood's Bitcoin is much higher if I buy it than the actual Bitcoin, or how come it's much lower when I sell it than the actual Bitcoin? It's because they've set their buys and their bids and offers wider, because they want to make sure they take the risk out of trading it as well, because they're offering it to their clients. That's one way of doing it. Another way of doing it would be an ETF like Grayscale. All right, GBTC is a way of getting exposure into cryptocurrencies that does not allow you to have to go and open a Coinbase or open a Binance account. And the third way would be to look for some of these stocks like Riot Blockchain. Riot Blockchain has been correlating highly with Bitcoin as well. And the reason why is because Riot Blockchain, well, if you go look at what they do, they mine Bitcoin. They have thousands of servers. They have a server farm with thousands of ant miners, is what they're called, located somewhere in New York State. And so they claim to have the largest server farm in North America. So, what they're doing, at least as mining Bitcoin, that stock should correlate to Bitcoin. Now, you go back and look at the history of Riot Blockchain. This is what kind of bothers me a bit. A couple of years ago, they were a biotech firm. They decided to completely change their business model, get out of biotech, get into crypto, and that's why their stock dropped and was 50 cents. I mean, it was less than $1.
Right.
Their 52-week range was cheap.
I'm looking at it March of 2020 or 2020, 53 cents.
Yeah, just above 50 cents. And it's because no one knew where they were going at that point. But now they've got the attention of companies like Vanguard, who own millions of shares of the stock. So they're out there. They've got exposure. They've got big boy money, as you call it, and they are moving around a lot with Bitcoin. So when I look at Riot Blockchain, the one thing that excites me is that it has options, and so what I look at is this is just me, Chris, and this is not investment advice. We don't give investment advice. We give education. But what I did was I've got a substantial amount of cryptocurrency, and I'm trying to figure out, how do I hedge that? How do I hedge Bitcoin? Well, if I come over here to Riot Blockchain and I've got options there, I could do put spreads, and I can do put spreads where if Bitcoin goes down, I know Riot Blockchain's going down with it, maybe a lot faster and a lot farther move to the downside. And therefore, what I might lose on my moves on Bitcoin, I could make something back on the put spreads on Riot Blockchain. So that's what I'm doing, is some kind of interrelational type of hedge by using the put spreads on Riot Blockchain to help hedge my Bitcoin position.
Gotcha. Nice. So did you see we talked last week about how Bitcoin is coming mainstream, and that's part of the reason why it's getting these moves. And now you've got a lot of the investment banks coming on and saying, yeah, we'll hold them for our clients, et cetera. Did you see the interview with Bill Gates where now he was actually asked about the server farms generating too much electricity and heat, that they are a concern for the environment. When does clean energy hook up with Bitcoin and make everything just blow up for us?
I did happen to catch some of that news, but there is so much news, there is so much opinion coming out about cryptocurrency and Bitcoin in general. To me, it just leads me to believe, stay the course, stick with your plan, because we got opinion that come out about every single company we trade. And so I stay the course, I stay my plan, I stay unemotional, I continue to use rules-based trading to back test and find opportunities. And that's what I have going forward. So, as I go into the final week here, or into this next week, if you want to call it that, of February, this is our final week of February. What I'm looking at is I'm looking at continuing to stay long on Bitcoin. Although when we hit that 67 mark, I'm going to be in a position where I'm going to reduce my position in Bitcoin. I've got to take some profits off the table because they are enormous. There are enormous profits. And so, I've been in this thing since 2013. I haven't sold any Bitcoin. I've actually bought more, and I made a couple of big investments last year when the pandemic came and dropped everything down. I made some big investments in Bitcoin. I made some big investments in Ethereum, and they have paid off in spades. Probably my biggest returns I've had so far when you look at what I've done in the last year. Publications that I've done pretty much line up with that same theory. I mean, any publications that we've done in cryptocurrency they've been fantastic. But I've got to start taking some of my major wins off the table, and I've got ideas of where I want to do that. But so crypto, I'm still long. As far as the market, I'm getting more and more into cash position because I'm looking for some stuff to go on sale. If you look at FANG right now, FANG is actually leading the way down. When you look at the Facebooks, the Apples, Amazon's not doing so much. Netflix is popping down this week. Google probably happens to be the strongest of the bunch. It's still hanging out near its all-time highs. But we're starting to see that shift away from FANG and shift away from clean energy and shift away from the stuff that led the markets higher are starting to roll over. As we end this podcast, Chris, for this week, what's on your sights for next week?
You know what? You brought up earnings season kind of winding down and going away. There's one segment of the market where the earnings are still coming in a little bit hot and heavy, and that's retail. Tom, retail sector is something that people are not looking at. I love trades that aren't crowded. The XRT, that ETF that tracks the retail sector, when you look at it, Walmart, Costco, they're going down. But American Eagle and some of these smaller Abercrombie and Fitch, they're starting to make a nice trend, and they're heading into their earnings season, and the outlook is improving. mean, MasterCard reported that we're seeing the retail sales go up. Part of that's because of the gift cards getting cashed in. Nonetheless, people are starting to get out there a little more. So restaurants, some of the retail I'm looking at, and believe it or not, I think I'm starting to nibble a little bit at travel here on the longer term perspective. It's going to be interesting to see what Carnival Cruise Line says here on their upcoming earnings. That could be a kitchen sink quarter, and if it is, I think you go from first touch travel, which is companies like Expedia and TravelZoo and those first points of touch, and you start digging down into some of the actual providers at that point.
Awesome.
That's where I'm looking.
Chris, we will leave it there. Thank you very much. Enjoy your weekend. We'll see you again next week as our Profit Strategies podcast rolls on. So good seeing you, buddy. Hey, good really seeing you for the first time as we did this video podcast.
No, it's been a while, Tom. A hot minute.
Yeah, it was fun. But again, folks, we will be, you can find out more about our podcast. Profitstrategies.com is where you'll want to go. And till then, have a great weekend. We'll see you next week. Bye now.